Hi there, traders. Welcome back here to Trade Delicious. We have another beautiful piece of content for you today. We are bringing back, you know him, you love him, the great Don Dawson, an incredible trader and an incredible source of wisdom. Here, we're so lucky to be able to speak to him. Don, how you doing, my friend?
I'm doing great, Aaron. Thank you for that intro. It's just, I feel like I'm getting put up on this pedestal. I'm going like, oh God, don't fall. I appreciate it. That's very nice of you. Thank you.
No, I sincerely believe it. I take a lot in from you, and I know that a lot of other traders do as well. You have no idea how oftentimes someone will reach out to me or they'll shoot me a message and they'll ask me something about what you're talking about, and I'll be incredibly confident in saying I don't really know. I'll get back to you on that.
Yeah.
And it's just because we're all here to learn. We're all students of the game,
That's exactly what I like doing these for, just sort of giving back and helping. But that just kind of like a light bulb just popped in my head. But if you're getting that kind of feedback, we could take any of those topics and do, a 30-minute segment on it or something and really clarify it for people who have some interest in or more interest in what we were talking about.
Absolutely. So I'm collecting a few questions as we go along now, and probably towards the middle of next month, we'll do a full Q&A just as an experiment to see how everybody likes it. If everybody likes it, then we'll continually do them. I think it's really useful, right?
Yeah. No.
Yeah. But I wanted to talk to you this week a little bit. We have oftentimes during our live streams, we'll have people asking questions about how long it takes to be consistent as a trader. And I always explain that, trading is not your equity curve is not a gentle slope that's positively going up.
That'd be nice if it was.
Oh, wouldn't that be nice? Just year over year, nothing but gains, no big deal. But it's never really like that. And I wanted to get your take on that. You've helped so many traders to become their best in your experience. And I know that you started off, you were a carpenter and you worked your way up to being a trader for yourself. How do you see that part of the trading journey? And how do you think about that when you explain it to new traders?
Yeah. It's interesting. It's one of those, sometimes when somebody says, how would you tell the young you today what you know, kind of a thing. And one of the things I look back on that was when I first started out with trading, I wanted to become a successful or, a career trader, if you will, obviously being successful to do it. But I think I didn't know better that it's much more helpful if you have some supplemental income or something to go on and let your account grow as you're a trader. Okay. Because being a trader doesn't mean you have to submerge, just in your life doesn't have to be 24/7 trading. You know what I'm saying? Because otherwise you're going to lead to burnout anyway. But it's always nice having that sort of supplemental income coming in. And I didn't think about that back when all I wanted to do was quit my job. I hate my job. I will get out of this. And actually, I was doing the carpentry work. And then when I got laid off during the late 70s when interest rates were up 16 and 18% for mortgages. So when I hear people complaining about a 6% mortgage today, I go, I remember 16 and 18 percenters and those were miserable. But anyway, I kind of got laid off during that time. And then I went into electronics and I sort of taught myself how to do electronics work, if you will. And it was interesting because that's where I kind of learned about creating a trading plan. And that was through reading flow charts on schematics. And that's how I set up all my trading plans is, if this, then that, yes, no. Yeah, and there's no gray in my trading plan. And I like that about my trading. So anyway, coming into that, I just wanted to kind of get out of that job and just trade. I just wanted to be home. I was thinking about the freedom of time and everything that could give me. But what I didn't realize how difficult that was going to be, especially as a new trader. And, it's nice to have that dream and everything like that. But we really have to have, throw some cold water on this dream and realize nothing like that's going to be an overnight success. Like, for example, I was a 5-year self-taught trader. And there was a lot of ups and downs. And I still have ups and downs. But they were a lot worse during that first 5 years. But you're trying, I was by teaching myself. I was self-taught. It wasn't like schools or anything were around. So it was a lot of that. And during that time, the equity curve didn't even have, we were talking about the ups and downs. Well, mine was more like the little dead cat bounces when they were up, and they were way down. They looked more like, no, that's an impulse wave, right? So I learned what an impulse wave was by looking at my equity curve. But corrections were supposed to be the other way. According to bad way. But anyway, I really do believe that's important that if traders can do something about, having a supplemental income, and then, and working trading into that so that they can have time to put the trades on. At some point, some people say, well, I can't day trade that way. Well, if you have a career that, starts after your day trading, you don't want to day trade all day long, for example. You should really just come in 3 hours or so in the morning if you're a day trader and be done with it, walk away from it. Because think about like a casino, they're open 24 hours for a reason. And if you, and that reason is because they know in the long run, you're going to lose money the longer you stay there. Well, the markets are open 23 hours a day. Do you see the parallel there? Same concept. So the point is, come in as a day trader, give you 3 hours at your best, for peak performance time, and then move on, go do your other career, whatever, studies and stuff like that. But and as a swing trader, it's even better because you can just kind of come in, do your trades, and you go out and do whatever else you want to do. So that's why I really think if traders can just work on that idea of having some money coming in while you're learning to trade, it takes a lot of stress off of you. And here's a couple of things that are going on. I think you and Jordan and I talked one time, and this was about, again, I should have looked this guy's name up he did a sort of, it was a breakfast interview. They were just kind of all 4 or 5 traders sitting around having a breakfast, and they were just chatting away, and as traders would do. And the idea came up about, do traders have jobs, other jobs? And it was ironic to hear where these guys were institutional traders. Okay, that's what was so famous about them. Arrogant as hell, but very, very good traders. But the point being is, they all said the same thing, that some of the best traders on the Goldman desk and other stuff like that all had incomes coming in from the banks or the firms. They didn't make all their money and lived off of that. They always had some kind of an income coming in. So it's much more of a relaxed atmosphere. If they have a drawdown period, it's like, I'm still getting paid, kind of like that. Right, so that takes a lot of the pressure off of them. Another thing that people don't realize about coming into trading too is, if you have to live off of what you're making, okay, one, you're going to have a very reasonable size account. Some people thought just because in the past it used to be like $5,000 to start trading futures, now it's like, $1,000 with the micros and stuff. But how are you going to make a living off of that? I mean, you've got to have enough staying power in there to sustain the drawdowns in there from your losses. Now let's throw your monthly expenses in there on top of that, right? And so let's just take a losing month, and every month you're taking money out of your account to pay for these, right? Well, if you think about it, that's almost like coming back to, ground zero every month as you take money out of your account. It's not compounding. So basically you're locked into the same size contract sizes all the time because you're taking the money out all the time because you're not growing your account. But if you had some other form of income coming in, you could really allow that account to keep compounding and getting bigger trader, becoming a bigger trader, better trader, stuff like that. And then take like an annual draw, give yourself a bonus or something. You always want to reward yourself for your trading. You don't ever want to say, I'm never taking anything outside your retirement account, or even set it up quarterly or, every biannually, whatever you want to do. But do something like that where you give yourself just a little bit, but don't be drawing money out of it like monthly or weekly, like you would like a paycheck or something. So I think that's important to have that extra income coming in, and you're still trading, okay? But just because you're not sitting at your screen 24 hours a day, that doesn't disqualify you from being a trader, right? You can still have income as a trader, income from something else. So I think that's really, really important for new traders to kind of comprehend that idea.
I couldn't agree more, Don. It's really funny. One of the reasons why I've admired you so immensely is because my story is very similar to yours. Of course, I was a carpenter when I figured out I wanted to trade. I went to school for architecture. That's just our minds work very similarly. 5 years in for me, same exact thing happens. I've been trading 6 years now. So last year, Don, I was doing spectacular. I was trading the best I'd ever traded. I was making great money. I was buying stupid stuff I shouldn't have been buying. The wife's engagement ring was $5,000 because I made that 1 week trading. And I said, you know what, if anyone deserves anything nice, it's my wife. I buy this beautiful ring. I
tell you what, I agree 100% with you on that. Because the wives of traders, they go through a living hell. Let me tell you, they deserve. They deserve a lot.
They're God bless her, right? But one thing I didn't realize, so what do? I do the exact same thing. I'm thinking, I don't need to be working this job. Look at my trading performance. Everything is great. It's fantastic. So I quit my job, and then all of a sudden my equity curve becomes more of a line. That line goes from being straight up and straight like 45 degrees to all of a sudden it gets horizontal for some reason, and then all of a sudden it starts to get negative. And exactly because of the reason that you're talking about. I had to depend solely on my trading,
Mhm.
and I didn't prepare like you think you would. People think like I did when you start trading, you just sit in front of the charts, and the longer you sit, the more opportunity you have. The more opportunity you have, the more you make. That's
No,
simply
not
not
at
the
all. That
case.
consciously or irrationally, I guess you should say that makes sense, right? But on the other hand, when you after you've done it for a while and you realize how many ups and downs there are in the market, and some of the downs were caused by you were fatigued, or you weren't feeling well, or you were distracted. You don't think about that until you go through those situations. But then you realize real quick, like I should only trade a few hours a day, not 7 or 8. Or should I trade the Globex session when it opens tonight? Oh my God, that's an addiction there. That's not.
It is. It is.
Trades in for longer term trades if you wish at the Globex, but sitting there trying to day trade or whatever you want to call that short term trading, folks, there's other things out there in life to do than sit there and look at a chart like that, and you got to be careful with that because as a new trader, it just kind of sucks you in like that, and that's kind of like what the market likes to do, it's like, come on in. It's kind of like a roach hotel, it's like the old things you used to get and the roach goes in, but they never come out. And if he did come out, he left a limb behind. And that's kind of like how the markets want to treat you too.
Left a limb behind. I mean, that's I couldn't say it any better myself. Exactly. You hop in and you're thinking intuitively, I can do this. I can do this longer. This is great. It's not, but that's simply not the case. We don't think about the mental fatigue that we have while we're trading. Like you said, that's why you're a swing trader now. One of the reasons, right? Because the fatigue is no longer there. You have to be at your best one day a week.
Exactly.
Whereas
Yeah. As
day
a day
traders don't
trader, I still
necessarily,
say day
yeah.
traders, they got to come in every day and setting up brand new trades. So they've got to be pretty darn close to their A game day in and day out. And the older I get, even when I was younger, I can't say I had that many A days, but as I've gotten older, I can count the A days on my hand, my one hand probably in a month. But anyway, I just found it's been much better for me to really Sunday come in and do really good analysis of what's going on in the market. And then as the week goes on, it's just managing the positions, or managing the trade setups. Or am I getting filled, moving stops, whatever, like trail stops and stuff like that. That's really what I just kind of like to do during the week.
Agreed. And I think that's probably the best way to part-time trade, in my opinion. I think for a lot of traders, that's where we should start. Now, of course, everyone has their different styles. Not everyone is as patient as they could be for swing trading. But the reality of it is, if you trade consistently over extended periods, over several years like this, it's a really great way to build up a large account. And then, hey, maybe you don't get to leave your job next week, but a couple of years down the road, you might be able to go do something part-time or go do something you really enjoy with your time and balance that with
Yes,
your trading.
totally agree.
One thing I wanted to ask you, Don, is, on that Sunday, when you're planning everything out and you have these trade opportunities, are you entering into these opportunities throughout the week? Do you enter everything? I'm sure it depends on your levels and everything of that nature, but do you usually hold things longer than a week? How would that work for you?
Yeah, I do. With the longer term trading like this, weekends don't impact me quite as much. So, because coming into the weekend, generally you already got a pretty good profit in the trade. So, if it does gap on a Sunday night or something, it's not like it's going to be as painful going against a no profit trade, or even worse, you were already losing money. So that kind of pans out. So, Fridays, I'm a little bit more tentative about, do I really want to put this trade? I had no profit going into this thing, for a weekend, And so sometimes I got to force myself to put a Friday trade on, or especially if it's a 3-day weekend kind of a trade. But the point is, my stops are pretty far away now compared to what the day trading was, because you're much closer stops when you day trade. So you're prone to being wicked out a lot more. So I think that's probably the biggest thing is just I look at the trades on Sunday and I'm really doing a sort of a macro view of what's going on. I'm looking at, for one, the seasonality of the market, the commitment of traders report, which came out on Friday after the market closed. So it kind of gives you the weekend to study that a little bit. And then I'm looking at some of the bigger trends that are in the market. And then I'm looking for, if I'm in an uptrend, again, I'm a trend follower, so I'll be buying at a support area. And sometimes those support areas are quite a distance away. So I just don't put the trades in on Monday morning. If we're 5 or 6 ATR, daily ATRs away, which is the average true range, there's no sense putting that into the market, because the way the brokerage firms work is all open orders on your platform get treated like they're filled for risk management for the brokers. So basically that money comes out of your account as margin, even if it's an open position. So you really don't want to tie your funds all up like that, while there's other opportunities out there you could do. So my general rule is every day when I do a daily worksheet at the end of the day, doing more trend analysis, and basically, are there any new setups throughout the week, or how close am I to my original setups? I look at that as a rule, and I say, if I'm within one daily ATR the night before, I'll put the orders in. Because I feel like, okay, if it says one daily ATR, I got a pretty good chance of it getting filled. Or maybe 1.5 if we're coming into like an FOMC meeting or something like that. And so that's kind of what I want to do on the weekends, is get sort of a big macro view. I'm not really... And depending how close the order is, I might go ahead and set up stops and target. I always have a first target, and the rest becomes a moving trail stop on there. I might set those up, but mostly I do that during the week when I set it up, because it's just the way the markets trade throughout 23-hour days. By the time you get into Wednesday, there's a lot of new support and resistance that been created during the week too. So I want to stay nimble enough that I can change with the markets. I don't want to just say I just look at it Sunday and that's all I'm going to do. So macro work Sunday and just kind of micro stuff during the week. So I would say Sunday might be a 3-hour type of a thing, 2.5, something like that. And then during the week, it might be, by the time I do trend and then the setup, maybe 1.5 hours. That'd be for spreads and for outrights in there. So maybe about an hour and a half. And that would be part of it the evening before and the other one the next morning.
That's awesome, Don. And you mentioned FOMC. Of course, we're having there's a lot of interesting stuff happening this week in terms of interest rates. So heading into this week, you've been kind of planning things like that. Do you have any exposure right now? Do you care about that happening right now for your trades that you have on, or?
The only thing I'm in, like currencies right now, are the only small things I got going on. I don't have anything in interest rate products. For some reason, interest rate products have just been so volatile. Oh, I shouldn't say some reason. We know why the Fed has been raising rates. It's just
some reason.
Yeah, some reason there. But the interest rates, the 10-year used to be, I used to love trading the 30 years, but the 10-year became the benchmark. I love trading those. And then what used to be a euro-dollar futures contract, which is now called the SOFR, that's the same concept, 3-month interest rate paper. Both of those used to be very, very good trending markets and stuff like that, but they're so erratic right now. So I've just kind of pushed them off to the sides a little bit. Even the spreads are just really out of whack. So anyway, I'm just sort of keeping them away. But when you're trading currencies, you're still trading interest rates in a way, because as interest rates change from one country to the next, it really has impacts to currency prices a lot. So, by looking at those, and plus, as you're coming into an FOMC meeting, it's how long have you been in the trade before it happens. So by the time you get there, if you've been in something for a week or week and a half, you've usually got a pretty good profit in that trade. And so the crazy stuff that comes out of an FOMC meeting, at worst, might hit your trail stop, something like that.
Amen, Don. I really appreciate your time as always, my friend. I think that's a great place to end the bi-weekly bites, just getting a better understanding of how traders can become traders without having to drop everything and try to start a business without having that backing behind them. It takes time to do this. And obviously listening to Don, you guys should tell, there's a real understanding of every component of every market, right? It's so valuable.
I think one of the things you mentioned earlier, and this is something that would have helped me a long time ago too, is think of coming into trading as a part-time job to start with, as opposed to you're going to be jumping into it with both feet. It's kind of like anything. It's like, new relationships, new homes, new whatever. You don't just jump right in, right? You kind of work your way in. Again, same thing with trading. Why not come into it with sort of an attitude of a part-time? Let's just kind of see if there's something I really like, because everybody wants to make money without really physically working, right? And trust me, this is the hardest easy money you will ever make. So don't come into this thinking this isn't hard work. But anyway, with that, you're still going to have where were we at on the shoot? I lost my train of thought on that.
No, part-time trading. We're hopping into working in.
Yeah, but with the part-time trading, if you come in there, I think that's really going to give you a much more relaxed attitude and not putting the pressure on you, because the pressure is what leads to so many mistakes in trading. We either feel like we're not achieving our goals because we're not trading enough, we're not aggressive enough, or new traders want to compare themselves to other traders, which is a big mistake. And then hear the media or the news or Twitter and all these other things where people are on there yakking about all these trades, these wonderful trades they've had, which they don't tell you about the lousy trades they had prior to that. So you think you're the only one not making money. It's little things like that that just puts all this pressure on you that causes you to make silly mistakes. So I think by coming into this as part-time, knowing like, hey, you know what, if I make a little money in this, I'm just adding to my wealth bucket or my income bucket, whatever. And if I get good at this, then shoot, I'll broaden it out a little bit. But I take the pressure off of yourself coming into trading. I think is a biggest mistake a lot of traders do, is just like, I got to do this. I have to make money. I got bills to pay. And I can't tell you how many times I'd start a class, when we used to teach that, and they would come in on Monday morning and you're doing the interviews, and people are going like, hey, I just lost my job. I got to get this trading done. And they thought they were going to take a 5-day class and come in next week and start trading. I said, hey, you're not even going to be trading for at least a year or two, making money, because it takes a while to really kind of get a groove of trading. But to think you're going to come in and start replacing an income a week later blows my mind. But that's, and you know what? It's just the mentality of traders who they either hear about, read about, whatever it might be, how someone else is doing it, but they don't realize how long that other person, if they're successful, has been doing this. Because we had a lady who was in my meetup the other night, and she'd been doing it for 6 years, and she was one of my students years and years ago. And she came in and she was just saying, she says, I just want people to know, says this trading thing is not easy. She says, I've been doing this for 6 years now. And she says, it wasn't long ago the light finally turned on.
Right.
And it was so good to have a student say that, because everyone could hear and see. It's not just me saying that, like I'm selling something, which I'm not, but that really is the reality. You don't just come into this and make consistent money. Sure, we get lucky once in a while as new traders, but to make consistent money in this stuff, that's a lot of work, and it takes a good plan and a discipline to follow that plan.
I couldn't agree more. And notice, guys, there's a common theme here. I've been trading for 5 years before I really started seeing a light. I'm in my 6th year trading. Don is now talking about a student that's 6 years in. She's starting to see the light. Don was self-taught and started really seeing money around 5 years. It takes time.
Yeah.
When you're jumping into this thing, a lot of people talk about it as if it's a university degree. It is, and then some. It's like a university. It's a bachelor's degree plus a 1-year master's, and for most people, right? And then you go from there. But either way, thank you so much for your time, Don. As always, I can't tell you how much I appreciate you, how much we appreciate you here at TradeDelicious. Guys, if you like to see this type of content, please like, comment, subscribe. We're going to be putting together a big Q&A to work with Don sometime over the next month, and we would love to go through your questions and help you try to solve your problems. Thank you so much as always. Please trade well and trade delicious. We'll see you. Don, thank you.